Hi, this is Zak Mir with a Pharma Stock Special on Sunday, the 19th of July here on Share Talk. Starting off with Avacta, where it looks as though the shares are primed finally after nearly 2 months within this triangle consolidation to break to the upside. Got a rising 50-day line as well. If you're cautious on the stock, probably want to wait and see if there's an end-of-day close above the 50-day line and that June resistance line to give us the next leg to the upside. If we get that over the next day or two, we'll be looking for a top of April trend channel target as high as £2.25 over the next month or two. Only back below recent support, £1.10. July support really coming in around that level. Twice would delay the fresh leg to the upside that we are anticipating there. RSI rising at 52 above neutral 50. And that should provide further positive momentum, as does the rising 200-day moving average way down there at 55 pence. On to 4D Pharma, and here you can see that we've got this typical consolidation that we've seen on many of the pharma plays, COVID plays over the last few months with a falling wedge formation. Good news is the shares managed to break out of that wedge on Friday. The wedge resistance line at 38 pence, so we've broken that quite well. And basically, as long as we remain above 38 pence, looking for further decent upside. Initial target, I suppose, would be back towards the low 60 pence area, which was early June resistance, and above after that up to the 200-day moving average at 72 pence. You can see the 200-day line blocking the rally in April. Stop loss at this stage back below 35 pence, which is July's initial support rather. So probably 34, 33 pence, the place to look out there in terms of money management. If you're cautious on the stock, maybe wait for the RSI to get back above neutral 50 versus 46 at the moment, as that should provide further momentum for the shares. On to Evgen Pharma, which is stock which, again, has been in consolidation mode since the peaks in spring. In this case, it was through 16 pence. Need to break that resistance line from May and the 20-day moving average at just under 10 pence on an end-of-day close basis to provide confidence that we're ready to head higher. But if we do get that, especially on a weekly close basis, the target here up to 18 pence or perhaps even more, depending on exactly where that resistance line from January is heading up to. A best case scenario target up to 21 or 22 pence over the month or two following any lasting break of the 10 pence level. Genedrive is probably gets the award for the stock that's retraced back from its peak the most. We had a high through 300 pence the beginning of May, and then since then we've been in a falling wedge formation. Bounced off the floor of the wedge last week at 60 pence, and ideally we don't have to retest that area again. There is a support line there from April running towards 55 pence, and obviously the 200-day line at 53. But if we can get out of that, there should at least be an intermediate rally back up towards that May resistance line and the 20-day moving average at just over £1. A weekly close above that line, though, would hopefully hint that the stock is ready for a rather more bold move to the upside and maybe retesting May resistance at £2 plus. But at least while we hold above 60 pence, it looks as though Genedrive's extended retracement is finally over. On to N4 Pharma, which has plenty of fans on Twitter and social media in general. Here you can see the typical retracement from April-May highs, in this case towards 8 pence. The good news here, I suppose, is we've had good support coming in towards the 200-day moving average at 3.83 pence, and also towards the floor of the rising trend channel that I've drawn from August last year. Support line there around 3.7 pence, so at least while we're above that, then we're looking for the consolidation as being one ahead of a fresh move to the upside. 4.5 pence plus should at least give us 6 to 7 pence over the month to 6 weeks following that break. And then obviously that we have the big prize there, possibility of a top of 2020 price channel target up to 9 pence plus, hopefully early in the autumn or even sooner. Next stock to take a look at is Novacyt, obviously one of the heroic rallies of the year. I think we spotted that here at around 16 pence at the end of January, but I suppose a lot of the shine was taken off that with the rather painful decline from £5 plus back towards 2 pence last month. Current situation is that we're caught between the uptrend line from March at £2.50 and the 50-day line at £2.84. If you're a fan of the shares, you want to see an end-of-day close back above the 50-day line over the next few sessions. If we can get that, then at least a return towards early June resistance around £3.60 could be on the cards sometime in August. And as I said, ideally no break back below £2.50 for the stock. It looks as though the way things are set up, we will not see a sub 220 move, therefore any a 250 move rather. Therefore, any dips towards that area in the meantime regarded as technical buying opportunities. Another of the heroes of the year has been Orphan, with the stock holding on to much of the gains that we've sort of seen since the March floor around 4 3/4 pence. Currently good support, or a decent support line there from March running through 12 pence. And what we're waiting for now really is sustained price action back above that mid-June resistance at 13 pence. Given the way that the 50-day line is currently rising quite sharply through towards the 13 pence level, probably just need to see a decent end-of-day or end-of-week close above 13 pence to trigger a new leg to the upside, a lasting one, as opposed to the brief move to 15 pence we saw last week. The big prize here, a rally towards the top of the broadening triangle from March as high as 25 pence. If you are cautious on the stock, then you wait for an end-of-day close or a weekly close back above 15 pence ahead of targeting 25 pence. At this stage, only really back below 12 pence on a weekly close would really delay the upside scenario. On to probably the stock of the weekend, the one that traders are licking their lips on in terms of what will happen tomorrow. But as we left it on Friday, Diagnostics still within its falling wedge, which was had its resistance line there at 41 pence. End of day close above that May resistance line, and the 20-day line is what we're looking for over the next few sessions. I suppose if we get a spike tomorrow, the initial target there would be 51 pence at the 50-day line, and we'd be looking for an end-of-day close above that to seal the deal in terms of a lasting move to the upside. If you are a fan of the stock and are dreaming of big things, the best-case scenario target there, or in this situation, would be that April line of resistance heading towards £1.40. But clearly a lot of work to do before we get to that area. In terms of money management, recent support at 32 pence and a stop loss just below that and just below the April support line would be in order on a technical basis. Ideally, there is no need for any test or retest of the 200-day line, currently at 24 pence. I think that would be a little bit painful at this stage. Last stock in the selection is Synairgen, which is almost identical to what we've seen at Omega Diagnostics in terms of the pullback from the best levels of April, May, and then the falling wedge that we've seen since then. Again, we probably need to see 41, 42 pence broken on an end-of-day close basis. And if you're cautious, maybe the 50-day moving average also broken on a similar basis before deciding or taking the view that a new leg to the upside may be seen. Stop loss back below 33 pence. We've had a double test in the low 30s for June and July, so that looks pretty well set now in terms of support. We've also got the rising 200-day line at 26 pence, which should be something which pressures the shares on the upside. Plus, we've got a bit of bullish divergence in the RSI window as well between the two lows in June and July, so that is also positive, as is the spike in volume for the shares at the end of the week. But if we do get through the 40 pence zone or the low 40 pence zone, We do have a best case scenario target here at the top of that broadening triangle from March, heading as high as 90 pence on a 2 to 3 month view, but obviously that we need to clear that, as I said, that low 40s area. That's it for me today. More updates and the normal bulletin board heroes from tomorrow.